I just bought something really big. How do I get a deduction for it? When you buy something really big or something that should last many years, such as a piece of equipment, maybe an automobile, maybe some real estate that's being used in business, there are any number of ways that you can get a deduction for that anymore. One example of a deduction that you can get would be to spread something out over multiple years. IRS refers to this as depreciation. Now, there are special rules that came about in the late 80s, early 90s, where you could take a deduction all at once for a certain qualifying property instead of spreading it out over a number of years. And this is when the big heavy SUVs started growing in popularity. That deduction is called Section 179. And if you have a heavy SUV that's being exclusively used for business, it's possible if you meet the criteria, it's not always the best tax decision, but it's possible you could take an immediate write-off. Where people get it wrong is they don't keep documentation, they don't keep records, they're really not using it for business, and a lot of different things that'll get you in trouble. So Section 179 is a way to write off certain things all in 1 year. Bonus depreciation. Bonus depreciation has different percentages over the years, ranging from 30% to 50% to newly unseen 100% the past few years under the Trump administration. In 2023, I believe it's scheduled to go back down to 80%. So what can you learn from this? Tax law is ever changing. There's not just one way to do it. We have regulated depreciation, spreading it out over the life provided by IRS. We have Section 179, which is a one-time write-off. We have bonus depreciation. One drawback to bonus depreciation is many states do not adopt it. And so that means that while you might be taking a federal deduction, the state won't allow you to deduct it. You have to spread it out over a number of years. In summary, when you're listening to a salesman that's giving tax advice and those car gurus are telling you can write off your car immediately and blow a bunch of money with them and get an immediate deduction, it's halfway true, but you have to make sure you comply with all the rules. It does not always make sense to take an immediate deduction for things. And I can give you a little example. I've seen this time and again where I pick up someone's tax return who did it themselves in the past, or they used maybe an unqualified person or somebody that wasn't thinking about the big picture. If you take such a big deduction that it drives your tax rate down to 0%, you are deducting that equipment at 0% tax savings. Optimization is where it's at, and that's what you really should be doing at the end of the day. And the other thing you should be doing is properly papering your transactions. Good luck with all this.